Ladies and gentlemen, distinguished guests, let me start by thanking AMRO and ADBI, the hosts of the ASEAN Plus 3 Economic Cooperation and Financial Stability Fora, for this opportunity. OECD, AMRO, and ADBI have a long history of cooperation over 20 years. For instance, the Asian Regional Roundtable on various topics, such as capital markets, macroeconomic, and structural policies, has taken place annually. And I am pleased to see that the cooperation has been strengthening. Today, I would like to present key insights from the OECD's economic outlook for Southeast Asia, China, and India. This is one of the longest-running OECD products, focusing on Southeast Asia and emerging Asia. So, what is the region's economic outlook for this year and the next? Allow me to highlight some core insights. Most significantly, real GDP growth in emerging Asia, which covers the 10 ASEAN countries, China and India, will face headwinds in 2023. We will expect it to weaken, reaching 5.3% this year, but it is expected to improve to 5.4% in 2024. Similarly, economic growth of the 10 member countries of ASEAN will slow down and is forecast at 4.2% in 2023 and 4.7% in 2024. Emerging Asian economies will face challenges in coping with a persistent downturn in external demand as exports have contracted substantially amid a prolonged slowdown in advanced economies. The start of the final quarter of 2023 continued to signal a further decline in the health of the region's manufacturing sector amid a series of global shocks and a deepening regional slowdown. Still, there are reasons for optimism. Our regional economic outlook points to the growing regional and domestic demands supported by high consumer confidence, strong labor market, and an expanding middle class. Domestic demand, particularly robust private consumption, will remain the key driver of economic growth in the region. Regional demand will remain steady, underpinned by broadening of the region's export destinations towards markets within the region. These efforts, along with deepening regional trade cooperation, helped insulate the region against economic slowdowns elsewhere. They also help to mitigate the effects of geo-economic fragmentation, opening new export destinations beyond traditional markets such as the United States, the Euro area, and Japan. The second promising finding concerns the expanding services sector. Service exports grew strongly during the first half of 2023, which helped keep export activities afloat in most of the region's economies, amid a substantial decline in merchandise goods. This contributed to export growth in some economies during the period. We expect the services sector to continue expanding and to be a major growth driver. This will be supported by the return of international tourism, which contributes to job creation. For instance, Indonesia's tourism sector is responsible for 11 million jobs, a number followed closely by the Philippines, Thailand, and Vietnam. Emerging Asia's services sector will be largely supported by its growing digital economy that is expected to exceed pre-pandemic levels by 2024 across its main sectors such as e-commerce, travel, food and transport, online media, and digital financial services. Demand for digital-based services in the region will remain strong. The rapidly developing cross-border e-commerce sector, including its complementary services, such as transport, warehousing, and other logistic operations, is particularly relevant. ASEAN and India playing a larger role in supply chain will enhance the development of these services. Third, there are promising examples of policy reforms and infrastructure development that can promote FDI and help countries integrate into global supply and value chains, particularly in electronics, textiles, and automotive sectors. Indonesia, for example, has benefited from an upsurge in FDI as it implements policies to boost the mining and the electric vehicles industry. In the Philippines, amending to foreign ownership regulations, alongside reform measures that reduce corporate income taxes, are expected to attract more FDI. The electronics sector, particularly the semiconductor industry, are showing signs of recovery in the second half of the year, supported by the rise of emerging technologies such as artificial intelligence. This will set a precedent of growth in the sector in 2024, which is expected to improve the region's manufacturing sector. And despite some slight fluctuations, the outlook on stock markets will remain positive, fueled in part by the rise of the emerging sectors, particularly in the services industry, such as e-commerce and digital-based services. Meanwhile, bond markets surged as some countries increased government bond issuances. Finally, we can observe the financial markets are relatively stable, likely due to the cautious monetary policies. Going forward, prudent monetary policies will be needed to preserve economic growth and inflationary pressure amid the risks to food and energy prices. But at the same time, the region faces challenges and the risks in the near term to which policymakers need to remain alert. A major risk to the region's growth is persistently weak external demand stemming from the prolonged economic slowdown in the advanced economies and the weaker than expected economic recovery of China. How economies cope with external headwinds will depend both on the diversity of their export base and on the effectiveness of policy response. The region will also feel the impact of the tight monetary policy in advanced economies and volatility in global markets. Financial and capital markets will remain vulnerable to the high interest rate environment on both the domestic and international fronts. Finally, we cannot ignore the impact of continued geoeconomic fragmentation and heightened geopolitical tensions. These external uncertainties, plus the arrival of El Niño, will present risks to food and energy security and supply chain operations, which could pose inflationary pressures in the regions. Those challenges will play a major role in shaping the emerging Asia's economic landscape, and the region needs to remain watchful on their imminent impact. We will not be able to solve all these important challenges today, but I hope today's fora will bring us all together to share views and exchange ideas on these important topics. Let me close by reiterating that the OECD stands ready to offer its continued support and enhance our cooperation with the region. For instance, in February, we will organize a consultation meeting to discuss the forthcoming OECD Economic Outlook for Southeast Asia, China, and India 2024, Growth Under Disasters, and will release the report next spring. With that, I wish you all the fruitful and interesting discussions today. Thank you very much.